The Dow pulls off a win. CNBC's Seema Modi joins us now with some of the details. Good evening, Seema.
Very good evening to you, Larry. Well, quite a day in the market today. Today's volatile day had the Dow Industrials avoid its longest losing streak since February of 1978. Our data department confirmed that the last 8-day Dow losing streak occurred in 1978. Luckily, we missed it by the skin of our teeth. As you can see, here's the Dow Industrials 1978 or 1977 all the way to present day in 2011. Now, the Dow Jones Industrial today was up 29 points, around 1/4%, snapping an 8-day losing streak. This is how we ended today. Let's also look at the NASDAQ. Now, we saw a strong recovery within the NASDAQ composite, gaining around 0.8%, was majority strengthened by the tech sector. So if you pull up some stocks like Microsoft, Google, Yahoo, and Apple, all of those stocks saw gains today. Microsoft seeing a gain of around 0.4%, Google 1.5%, and Yahoo and Apple also seeing gains. Yahoo in specific, a gain of 2%. So that was really the tech sector that fueled the NASDAQ and allowed the NASDAQ composite to see some gains. But since 1978 was a special year, since we'll now give you some special footage of Larry from 1978. Check it out.
Already the Dow was below the psychological 800 mark, and analysts concerned about the dollar, worried about inflation and energy policy, were predicting even more trouble in the future.
I'm afraid that the stock market and the bond markets have considerable downside erosion left, and I wouldn't be surprised at all if, using the Dow Jones as a measure, we reach 750 before too long.
Who was that guy?
Larry, you're a handsome man. You still are a handsome man. That was amazing. Can you believe that? 1978. Do you remember that day?
No, I don't remember any of it. I don't remember 3 nights ago. Seema Modi, thank you ever so much for that report. Let's bring in our experts. Lee Munson, Chief Investment Officer at Portfolio, CNBC contributor Andy Busch of BMO Capital Markets, CNBC contributor Jack Bourdoukjian, CEO of Index Futures Group. Well, fellas, all I'll say about that news clip is I don't see a 750 Dow coming up soon at all. In fact, Lee Munson, I guess I'm a contrarian here. I don't even see a recession, and I think with large corporate profits relative to interest rates, stocks could be undervalued. So I'll start with you. Is that a possibility?
I think it is. I think that when we look at the first half of the year, everybody's talking about bad GDP from high gas prices, Japan, and Euro and U.S. debt threats. I think if you want to make that bet for the second half of the year, go ahead. I'm buying your stock. I'm selling your puts. But I think that we're going to have a pretty good half of the year. We don't need unemployment to improve. All we need is to have that corporate profits, low interest rates. We're getting everything that we need. We just have to remember, we just had a bad first half of the year. I am bullish. I've never been more bullish this year. You know, we bought a lot today, put it that way.
All right. Wasn't so bad for stocks, by the way. Andy Busch, can I ask you a blunt question? Who cares about Italian bonds? I'm so sick of this. Who cares about Italian bonds, Andy Busch?
Well, Larry, it happens to be a fairly large country with 1.85 trillion worth of euro debt that a lot of bondholders have. I think the numbers out of SocGen today, when they wrote down the Greece component of what they own, signals to everybody the potential for the write-downs that are out there. So sadly, we do have to focus on this. But your first guest brings up a good point. The second half of the year looks pretty good. I think there's a lot of temporary factors that are out there that are negatively impacting the markets. But I got to tell you, it doesn't look really great right now, and the talk of QE3 is truly disturbing out there from the Fed. I don't like that at all.
I agree with you, buddy. It's just going to drive the dollar down and oil prices up. I agree with what Jimmy Cramer said earlier this evening. Lower oil prices and lower inflation will keep this economy going. It isn't going to be fabulous, but it's not going to be in a recession. Jack Bourdoukjian, again, my friend Andy Busch. Look, Jack, don't buy any Italian bonds. Buy German bonds. They've been rallying like all get out. Italy's not going to fold, and if they do fold, the European Union will rescue them, just like Greece, just like Portugal. In other words, I'm saying to you, Jack, this business about Italian bonds and bond spreads, this is just the bears running viral. It has no meaning for the U.S. stock market because there isn't going to be a catastrophe. I'm sick to death of it, Jack.
It's got one little meaning. You've got a lot of these institutions that have got these portfolios of U.S. stocks. They have to liquidate those portfolios. They have to repatriate that money back home because it's going to cost them more. So your Commerzbanks, your Deutsche Banks, those are the stocks, if you have noticed, that have gotten clobbered over the course of the year, rightfully so, because they're holding a lot of that junk. That is the effect that we're seeing. In fact, over the course of the last few days, it was not this whole debt ceiling debate. It was the liquidation of these portfolios. And it's really sending the wrong signal. And Larry, you're absolutely right. I'm not drinking the Kool-Aid either. Even though we got what I consider to be socks and underwear for Christmas, with it was still a gift. And, as an old son of an immigrant, I'm learned not to be ungrateful, and I can accept that. There are a lot of reasons to be bullish right now, equities. Every now and then you look back in hindsight and say there was that window of opportunity. This is one of those between valuations and everything else. Absolutely.
For heaven's sakes, the equity risk premium, Lee Munson, is way too high. You're running close to 8% on the forward earnings yield of the S&P 500 compared to what? 2.5% on Treasury bonds, 4 to 5% on corporate bonds. So if Italian bank sells U.S. stocks, Lee, you're there to buy it. Is that your position? You're going to scoop them up.
Yeah, what they say, the way to be nice about saying you run a hedge fund is saying that, you provide liquidity. So I provided a lot of liquidity for people that wanted to unload. I would say that we need to lighten up today. It's been, a horrible 9 days. If there's ever a time that we need to have Don Lusking on and talk about, the S&P at 2,000, this is the week.
Right.
Let's bring them on. I say let's, bring on the pain for the bears. I think technology looks great. Retail could surprise. And don't forget about manufacturing because their input prices are lower because of this drop in oil prices. Oil goes lower, we will go higher. And I think that those industrials in America.
What would you buy?
What I buy today?
Yep.
I was buying Network Appliance today. I was buying PH Parker Hannon. I was also buying Guess, the people who brought you Guess jeans back from the 80s, man. I remember seeing you. I was 3 years old back in 78.
All right,
so.
78, 3 years old. I'm not predicting 750. Andy Busch, I don't see a recession either. Profits are too good. The Fed is too easy. But continue your thought on why QE3 would be a lousy idea, please.
Well, because the Fed really is going to have to go out the risk curve to do something. We've heard a lot of talk about using a twist on the yield curve to sell the short end, actually buy more risky, longer dated securities. That's an option. There's all sorts of things they could be doing, like buying corporate bonds. That's about as far as they should go. And it's dangerous when you have the government stepping in and owning corporate America. That's a scary thing. And in regards to what I want to avoid, I actually, as far as stocks go, there's a couple sectors I'm concerned about because of the coming cuts through Congress, and that's the Defense Department. So defense stocks look kind of iffy to me. I'd probably avoid that sector. And the other thing is medical providers, because they're going to get whacked as well. Medicare is capped at 2% for a cut, and everybody else is going to get hurt. So I'd be very kind of careful about those two sectors.
Yeah, would you buy cyclicals? Would you go back into industrials? Would you stay with tech, which had a very good day? Would you buy Cat? Would you buy Deere? Would you buy General Electric? Those kinds of stocks that pay decent dividends. Let me get Jack Bourdoukjian. I'll give you the last word. Is that the kind of stuff you should buy if you share the view that we won't have a recession?
Absolutely. That's the global growth story. And something else happened today, Larry. We saw something with confidence. Remember, this market has been lacking confidence. When word came out that Corzine might replace Geithner, we saw this market react positively for the first time in a while. So, this is the type of thing the market needs. It needs good news, and it might come in the way of a reappointment of, say, a Corzine into the administration. Believe it or not, that could be the catalyst.
I can't see how that would be a good thing.
Why not? Why not?
The second coming of Rubin.
Why not? The second coming of Reuben Lee Munson?
I can't see how that would be a good thing. Unless he comes out and emphatically states he's for a lower, flatter tax code for corporations. I don't see it.
Music to my ears. That is a great way to.
I just got excited about a lower tax code. That's all I have to say.
We're going to have to get my friend John Corzine on the show immediately if he's going to be Treasury Secretary. We got to get him some free market capitalism before he goes back to Washington. Lee Munson, thank you very much. Andy Busch, Jack Bourdoukjian, you're all terrific.